Crypto prices rising today, with Bitcoin breaking above $45,000 to its highest level since January 12th. That's the day after spot Bitcoin ETFs went live here in the US. Ether climbed more than 1%, crossing $2,400, and Cardano surged more than 8% to 52 cents, all as of noon Eastern. Bitcoin's move higher today came as shares of New York Community Bank extended losses. Worries about regional banks have worked in Bitcoin's favor since last year's regional banking crisis, when investors who lost confidence in the banks turned to crypto as a hedge against uncertainty.
Welcome to Crypto World. Thank you so much for joining us today.
Thank you.
I want to start with ETFs. It's been almost a month since we got the approval of spot Bitcoin ETFs and they began trading. We have talked about, and we still talk a lot about, what that means for Bitcoin and for the crypto space long term. From where you sit, what does it mean for you and for your business? Is this competitive ETFs or is it complementary?
I think that Bitcoin ETFs are a great step for the industry and for us as a company. For the industry, the ETF opens up the investment capability for people who are not in the crypto space, who do not want to open an account in a crypto exchange or do not want to own their own wallet, but they can do that through their equities broker, and they can get into the crypto space. So it opens up the market to just about everyone that can invest in equities. For us as a business, this is also great because these funds, number one, they need to buy Bitcoin someplace, and they buy those at exchanges like ourselves, and that's good. The second thing is our mission is to increase the adoption of crypto around the world, and this is definitely a step that does that. And the third point is we have a subsidiary called CF Benchmarks, which creates the index for the ETFs. And our index powers 90% of the ETFs that have been launched. We've seen a very, very positive welcome to the ETFs in this world. Over $1.5 billion of net inflows. So a lot of money has left GBTC, the largest fund that holds Bitcoin. But if you look at net, there's over $1 billion that have come into this in less than a month. I think it's the most successful launch of ETFs. Highly anticipated. It's been in the waiting for a very long period of time. It needed to go through the courts, but it finally arrived, and we think it's great. We also think it's the beginning of additional ETFs. So there's discussion of derivatives of BTC. There's discussion of an ETH ETF later this year. So we think it's a great step for the industry and for us.
How does it help Kraken with its mission of increasing crypto adoption globally? Is it just a matter of getting people comfortable with Bitcoin through a wrapper like ETFs that is familiar to them to, maybe help them get to other crypto assets that they might buy on Kraken? Just explain that a little bit for me, how the ETFs help you with your mission.
It's exactly what you said, Tanaya. People can now access Bitcoin without going through all the complexities of owning a wallet or understanding what it means to actually own Bitcoin. I think it's a first very easy step to own the asset. Beyond that, the way that it's influencing globally, you asked, so other countries are looking at that as well. So Hong Kong is now likely to be the next country that offers Bitcoin ETFs. And we believe that once people get comfortable with the initial asset and they see the performance, they understand more about it, they'd like to learn more. It's just like owning your first share, right? Whatever that share was, after you owned your first share, it makes sense to look at other shares as well. So beyond Bitcoin to Ethereum and beyond Ethereum to other assets.
Breaking Bitcoin news. Crypto's heavyweight champion Bitcoin has just erupted past the pivotal $48,000 price barrier as a staggering $405 million flooded into its exchange-traded fund, ETF, in a single day. After a painfully dull 2022 kept Bitcoin pinned under $25,000 for literally 6 straight months, almost as if this once unstoppable crypto juggernaut was frozen in a blockchain ice age, Bitcoin has awakened with a fury in 2023, catapulting over 90% higher since the start of January. Leading crypto evangelists now believe Bitcoin could eclipse its former glory by sailing past its previous all-time high around $69,000 set in late 2021, on its way towards setting its next milestone above the psychologically monumental $100,000 threshold for the first time ever later this year. Driving this parabolic ascent is a wave of institutional cash fear of missing out into Bitcoin exposure to ride what some analysts argue could be the tailwinds of Bitcoin's popular 4-year boom-bust halving cycle, combined with its reputation as digital gold hedge against inflation ravaging fiat currencies. On February 8th, Bitcoin left investors cheering as its price swung past $47,000, nearing the pivotal $48,000 threshold. This coincided exactly with a tidal wave of cash flowing into Bitcoin's ETF in the United States. An eye-popping $405 million entered the ETF on that day alone, the highest single-day infusion of the past week. To put into perspective how massive this is, $405 million represents around 8,935 BTC added in just 24 hours. Leading the charge is BlackRock's IBIT ETF and Fidelity's FBTC. BlackRock saw an incredible $204.1 million enter its ETF, while Fidelity managed to rake in $128.3 million, and get this. Ever since the long-awaited Bitcoin ETF launched on January 11th, it has attracted a gargantuan total inflow of over $2.1 billion so far. Now, what's fueling this sudden appetite for Bitcoin investment? Well, analysts believe investors are hungry to tap into the twin narratives propelling Bitcoin's price higher right now. Narrative #1, the Bitcoin halving cycle. The Bitcoin halving is when Bitcoin's mining reward gets cut in half, meaning fewer new BTC enter circulation. It happens every 4 years or so. What's important to know is that after each halving, Bitcoin has historically skyrocketed to new all-time high prices. Well, Bitcoin just underwent its last halving event in 2020. So investors now anticipate Bitcoin's price will continue climbing over the next 2 years until it peaks with blistering new highs. Hence the FOMO to get positioned early, while Bitcoin still trades under $50,000. The second key narrative is Bitcoin's image as an inflation hedge. As currencies like the dollar lose purchasing power, Bitcoin offers a potential store of value to shield one's wealth. This makes BTC enticing for investors worried about red-hot inflation right now. Between these two compelling narratives, it's no wonder so much institutional money is now chasing after Bitcoin exposure. Bitcoin is basking under extremely favorable winds right now, thanks to soaring institutional investment. However, some altcoins aren't quite so lucky heading into next week. In fact, some experts explicitly warn traders to avoid specific cryptocurrencies over the next 7 days. Let's discuss why. The chief risk brewing for these altcoins can be summed up in one word: unlocking. Basically, some crypto projects have major token releases scheduled over the next week. Of the $338 million in crypto tokens set to unlock, a whopping 98.9% is concentrated in just 3 coins: Aptos, Sandbox, and CyberConnect. First up is Aptos, which has its unusually large scheduled unlock set for February 11th. On that date, Aptos' vesting contract will release nearly 25 million Aptos tokens valued at $221 million. The recipients are Aptos investors and core team members who will soon have access to some extremely liquid assets. To put into scope how significant this is, the unlock triples Bitcoin's daily ETF inflows. Plus, it will instantly expand Aptos' circulating supply by over 7%. So what could happen when the selling restrictions lift on all these coins? Well, basic economics tells us, when supply rises dramatically while demand stays constant, prices tend to drop. With such an abundance of newly released Aptos tokens flooding the market, immense selling pressure seems inevitable. Next up with pending unlocking drama is the Sandbox, with its 205 million SAND tokens unlocking February 14th. Valued around $95 million, this batch of liquidity for Sandbox insiders will inflate supply by 9.2% overnight. Then we have the smaller cap token CyberConnect, which unlocks February 13th. This presents similar downside risks, albeit on a smaller scale. Still almost $18 million and 16% circulating supply entering the market. Now, in the manic world of crypto, anything is possible. Prices can pump against all odds and logic. However, as a prudent trader avoiding unnecessary risks, steering clear makes sense here. With so many newly unlocked tokens likely incoming, the rational move seems waiting out the volatile unlock period in cash, then scooping up discounts if selling pressure tanks prices. Rather than dangerously speculate, investors should await confirmations of support levels re-emerging should prices correct hard. Patience pays. Helping rocket fuel Bitcoin higher is a massive $405 million invested into BTC's ETF just this week alone. Clearly, institutional appetite for Bitcoin exposure is heating up fast against the backdrop of alluring narratives like the halving cycle and inflation hedge promises. With so much new money bidding up Bitcoin's price based on long-term projections, it's no shock BTC has awoken from its months-long slumber. This sleeping giant now seems poised to continue trending upwards based on bullish indicators. However, quite the opposite picture is taking shape for select altcoins like Aptos, Sandbox, and CyberConnect next week. Rather than explosive upside breakouts, the data instead warns of serious downside risks. This danger stems from approximately $340 million worth of unlocked token flooding the markets for these cryptos. As covered earlier, basic economics suggests when circulating supply rises sharply while demand stays flat, prices tend to drop. And with such tremendously lopsided supply increases of up to 16% launching literally overnight next week, warning sirens blare for sudden value deterioration if holders rush for the exits. Traders must ask themselves, do I feel lucky speculating whether manic crypto buyers will somehow absorb all this dumped token supply? Or is discretion the better part of valor here, sitting in stable cash? The prudent move seems waiting out the storm locked safely in USDC. Then once the violent unlock period passes, scoop up discounts if fear-driven selling indeed materializes. Yet while icy cold feet make sense towards smaller altcoins, the case strengthens for strategically holding Bitcoin longer term. Assuming inflation persists eroding fiat currency value, Bitcoin's provable scarcity makes BTC shares seem destined to rise valued against dollars over time. This implies that any dips related to the macroeconomy, stocks, etc. As with any asset, moderation remains key. Consider balancing higher risk holdings like crypto with more conservative cash equivalents to smooth volatility, rather than extreme all-or-nothing bets. Finally, as Bitcoin catches media attention again, just remember, chasing fear of missing out rarely ends profitably in treacherous crypto trading. But nor does arrogantly dismissing game-changing assets at their earliest stages either. As always on InvestMinder, we aim towards reasoned analysis, not polarizing hype or FUD. The middle path ahead seems gradually accumulating top blockchain projects when logic and value aligns while mitigating downside risk through prudent cash management. In this video, we've covered quite a lot of ground analyzing the latest hot topics in the crypto space. Let's quickly recap the key takeaways around both the Bitcoin surge and looming altcoin volatility. Starting with the star of the show, Bitcoin. Driving this intense appetite are alluring narratives like the impending halving cycle projected to propel Bitcoin towards six figures, along with Bitcoin's potential as an inflation hedge against devalued dollars and negative yielding assets elsewhere. With demand metrics exploding both on-chain and across global exchanges, we explored why Bitcoin seems positioned to continue its rally, exacerbating fears of missing out.